back in the office now, and we're going to take a deep dive and have a look at why this opportunity made it to our deal of the month category. So to start off with, let's talk about the location. Now, I've made a couple of videos already on the Brisbane market, so go check it out. This particular property is in Sumner. It's one of my favorite suburbs, actually, because if I zoom out a little bit, you'll be able to see where it's actually located. So maybe I'll flick it back over to this. So you can see Sumner's located literally in between Brisbane CBD and Ipswich. So it's along the Western Corridor. And again, in a number of my videos, I've highlighted the growth prospects and the growth history around this area. So if you look at Sumner and the surrounding suburbs around it, it is definitely a very strong performing location, very strong performing market. It's also got very strong drivers as well. Predominantly it's access. Access is very strong. So you're located, just off the M5 motorway, and you've also got access very quickly to the M7 motorway. So you go north, east, southwest very, very quickly. So considering all that, we found a gem in the mix of the Sumner market, and the opportunity, which I'll explain in a second, is for us to be able to buy a property that's a little bit run down, spend a bit of money on it, and repositioning it. So the property is 15 Bourne Street. One of my clients bought this property, and the idea is to spend a bit of money refurbishing it. And I explain what the details are going to be like, and then basically reposition it. I'll share the numbers with you guys in a second. What I like about this property, first of all, it's elevated. So it's never been flooded. So a lot of these properties in Brisbane are flood prone, or they've been affected by flood, over the last sort of, few years or a decade. This property, as you can see, goes up the driveway. It is elevated, so it has not been flooded and is not flood prone. In terms of position, as you can see, great position. You're surrounded by a number of well-established industrial properties and businesses as well. So take a slightly closer look at it. It is definitely an older property. So the seller who sold this property to us, he had his business in there for about 25 years or so. So he bought this as an owner occupier. Obviously, he's retiring, so that's why he sold the business and also sold the property as well. So I've got a bunch of photos which we can go through, but one of the easiest ways to look at this this property is actually through the information memorandum. Now, these professional photos make the property look amazing, but in reality, the property is definitely a little bit more run down than it looks like. Some of the key features, I think I skipped ahead a little bit too quickly. Some of the key features are you get a total building area of just over 2,000 square meters. So it's an ideal size. A lot of tenants, a lot of demand for that size in this market. And you've also got a good combination of clear span warehouse and open plan offices as well. So it's about a 15% office ratio, which is ideal again. And it sits on a pretty good site area of just under 1 acre, so about 3,876 square meters in an I2 general industrial B site zoning, which is very attractive. And it's also got a pretty decent internal clearance of 5.8 meters. So overall, the property's got very, very strong bones. Great location, good growth prospects in terms of the market, and the building and the property itself has very good fundamentals as well. So looking through some more of these photos, again, professional photos make the property look amazing, but it is definitely a little bit more dated. So that's what the offices look like, and coming up to the warehouse. Now, a couple of things that's worth noting, even though this is an amazing clear span, high clearance warehouse, it is a little bit dated, and the roof, as you can see from the photo here, needs a replacement. So this is one of the major items on our refurb list, which I'm going to go through in a second. But some of the other things that we're looking at doing is obviously touching up the office space, just giving it a bit of a cosmetic sort of upgrade. We're also looking at painting the exterior, so giving it a nice coat of paint. And also there's a little pocket here, which I beg your pardon, I skipped through a little bit too quickly. There's a little pocket here, just under the building here. There's about now 200 square meters or so of just car parking space, which we're looking at potentially turning it into some sort of storage space so that we can increase the rental amount overall in the building. So going into perhaps the building inspection report, we could probably see, yeah, a little bit more realistic photos of the property. So as you can see from the photos, hopefully you're watching this on a larger screen, you can see that the roof obviously has had its day. Okay, so here's that photo that we're looking at. So as you can see, yeah, this is a regular camera, not the professional camera. And you can see that sort of the, you know, sort of the condition of the building. Don't get me wrong, the fundamentals of buildings is very, very strong. Obviously, the condition of the building is not as strong as it needs to be. But the idea is, just to give you a sense of what we're looking to do, we're basically looking to turn that property into something that looks a little bit like this. So we made some renders, and so we're going to basically reposition the property, modernize it, close off this space here at the bottom, as we mentioned, into storage space, and also in the process, upgrade the internal office space as well, just to modernize it a little bit, to make it a little bit more appealing. This way we can reposition the asset from probably a BC grade to something that's a little bit more sort of B+ grade, which would be amazing. So in terms of the numbers, let's have a look at it very, very quickly. So the asking price, the original asking price was $4 million, which is what the owner wanted during the campaign. Obviously, we pay much less than that, and I'll get into that in a second. But one of the things that we looked at is, what is the condition of the market? How strong is the market? Had there been a lot of leasing, a lot of sales activity? As you can see from our spreadsheet here, we've collected a lot of leasing evidence, and we've also collected a lot of sales evidence as well. So with all this information that we've collected, and there's plenty of comparables here, as you can see, we're able to formulate a view on what this property should be getting if it was well maintained and refurbished. So one of the key things we're looking at is the market rent. So once this property is done up, we feel like conservatively, again, I would stress this point, conservatively, we should get somewhere between $145 to $155 per square meter net. As a matter of fact, I'd be very surprised if we get under $155 per square meter, just given the tight vacancy in this market. The other thing we look at is, what's a fair market price based on a per square meter land value. So somewhere between 12 to 1,500 square meters is what we've adopted. And then what is the building worth, or what should it be worth on a base per square meter, a price per square meter on building. So somewhere between $2 and $2.5 grand per square meter. So asking price of $4 million, we negotiated down to $3.4 million based on a vacant possession, which reflects $877 per square meter on land, which is below market range, and $1,629 per square meter of build, again, which is below market range, which is amazing. So what are we projecting? What are we forecasting in terms of rental and valuation? Well, this is what we're looking at. So based on the lower range of 145 and upper range of 155, the rent that we should be able to achieve is going to be somewhere between $302,000 to $323,000. As a matter of fact, we haven't, in this particular feasibility, we haven't actually factored into that storage space that we're converting. So that's probably going to add another 200 square meters to the NLA, and that's probably going to bump up rents to closer to $350,000 net per annum. Now, I always take a more conservative approach, and this is exactly what we're doing. So based on the $323,000 net rental, applying a conservative cap rate of 6.25%, the property value should end up somewhere between 5 million to 5.175 million. That's quite obtainable, considering the rate per square meter on build on these valuations is just shy of 2.5 grand per square meter, so which is well within the market range. So we're not exceeding market range. So these numbers here are conservative, and I think it's very, very well achievable once these upgrades are done. And I'm going to get into these upgrades, what we're doing in a second. But just bear with me for a minute. So if we're able to buy the property at 3.4 and we can make it valued at over $5 million, clearly there's a huge upside potential. The question now is, how much is it going to cost for us to realize this profit, realize this upside? Well, this is where the feasibility comes in. If you're familiar, if you watch one of my other videos, you'll be familiar with the way that we set these things up. So the acquisition, so first of all, the project duration should be no more than 6 to 9 months. So about 2 months worth of refurb and then another few months to let the place out. $3.4 million acquisition. We've got stamp duty, we've got closing costs, we've got consulting costs. So the total acquisition cost is about $3,654,000. We've got some leasing costs. Obviously, we need to appoint leasing agents to find us a tenant. So there's about 42 grand worth of leasing commission that we need to pay. We're anticipating that we need to provide about 10% incentive to an incoming tenant. So that's about 53,000. There's going to be about 3 months worth of vacancy that we need to account for. So there'll be 3 months worth of interest payments, 3 months worth of outgoing payments, and probably around $500,000 worth of refurbishment costs. Now, this budget that we've put into a feasibility was actually right on the dollar. So based on the quotes that we got back from the roof company, from the fit out company, from the builders, it came in at exactly 500, well, just a touch over $500,000. So our feasibility here is quite spot on. So total cost to do this exercise, the refurb and relet, it's about 644,000. So total project cost is around just shy of $4.3 million. So if we're aiming at a $5.2 million valuation, again, we haven't taken into consideration the additional 200 square meters of NLA. We're sitting at almost $900,000 in net profit. And this can be realized within about 6 months sort of period. So which is pretty good. That's about a 20% profit margin realized in 6 months, and a ROI of about 45% and an IRR of about 45%. So how do we work out the IRR and ROI? Well, it's based on how much capital you need to put into the deal. So based on a 70% LVR, which is what we're able to get, the client put in about $1.9 million of his own money. So $1.9 million of his own money went into the deal, and we're expecting a almost $900,000 net profit to come out of it. Now, the client's intention is to hold on to the property, which is great news. So the cash flow is very, very attractive based on these numbers. Now, let's get into the nitty-gritties of the refurbishment a little bit. Now, as mentioned, the roof needs replacement. So that's one big ticket item. So that roof replacement came in at about 300,000. We're looking at painting the external, as I mentioned. So the paint work plus replacing some of the windows, plus upgrading that office space, which includes a little bit of demolition. That came in at about 150,000 or so. So basically, yeah, just modernizing this, and then there's another $50,000 to, big pardon, another $50,000 of just miscellaneous costs, basically just removing some of these trees, fixing up some of the downpipes, reinforcing the retaining wall at the back, and also enclosing this little area here to make it into a storeroom. So all up, all these items add up to about $500,000. And yeah, you know, it's going to allow us to reposition the property and really realize this gain. I quite like this property for the reasons I've stated. In summary, I really like the location of the property. I really like the size of the property. I really like the layout and the configuration of the property. And I really like the fact that by spending $500,000 on the property, you're going to get back almost double in net profit by doing that. So it's good little refurbishment play here, little good sort of refurbishment and repositioning. And this is the deal of the month. Now, if you enjoyed this video and you learned something, then please give me a thumbs up. Also, please subscribe so that you get alerted with my next video. And most importantly, if you want to learn more tips about how to make money in commercial property, then feel free to click the link below and reach out. I'll see you in the next video.